Good morning, welcome to Morning Outlook. This is Kim speaking on Wednesday, 29th of July. So, looking forward to what key event news is coming out today. We've already had Australian data come out at 2:30 this morning. Aside of that, really, it's all resting on the FOMC report and statement meeting, etc. this evening. Now, just looking at the timing, we do have a bit of pending home sales at 3 p.m. I can't see that moving the markets in any shape or form. I don't understand why it's quite so highlighted on here, but more importantly, if you're following oil 330, crude oil inventories may create a bit of volatility there, but the FOMC statement, Federal funds rate, and the press conference that follows at 7:30 is more likely to create some volatility. That being said, as much as I have this sort of underlying suspicion at some time they may cut rates below the 0 to 0.25% level, maybe just even fixing them a straightforward zero. They don't seem to do that. They seem to be it will probably be minus 0.25 to 0 the next, if there is such a cut. But the more I read around from central banks, it seems that they don't necessarily agree with that happening. And to be fair, there is good reason why they probably will stall it as long as they can on the basis that interest rates are already historically low. The only things that I'm reading there is that they may change some wording in terms of inflation. In other words, if inflation does run over the 2% level for a while, they won't necessarily take action to reduce that, on the basis that it's almost natural that we'll get a higher level of inflation in the midst of things. So there we go. On that basis, not necessarily expecting too much, but the question, I guess, is and I'm seeing sort of flashed around by brokers this morning, is this going to be sort of the end of the current rally for the likes of the euro, etc. We'll have to wait and see on that one, because we'll see how traders take it. It has had a very steep run up here. For example, on the euro dollar, we've seen some steep old moves. Some of them have been a bit more considered moves, but for sure in the longer term, if we look at the dollar index, it has had, let's just bring the dollar index in here, the dollar index has taken a beating over a much longer term, and that's really got to be taken into account. Is this going to continue? Well, as I say, we can't second guess that, but we can certainly look at what the evidence is post the news. For now, though, these markets do look bullish, the euro, etc. Just looking at the euro here, it's just a little bull flag sort of price action sort of across there, but has pushed up at the moment. What could change this? Well, maybe if we see a break of the lows here. So instead of it has broken this sort of what is a bull flag here, but maybe a switch back, which gives us a lower high. We may see a bit more softening. In the bigger scheme of things, if it does really start selling off the euro, we've still got these sort of key moving averages and the weekly pivot, which could become a target there. Okay, shorter term, let's just run down to the 60-minute here. And you just see really yesterday consolidation. I wouldn't be shocked if we see another day like this today. If we do see it start trailing down, we may be able to jump aboard on a small short, but at the moment it's really a bullish looking market, and the bigger trends, short term, even the sort of intermediate with that break of that bull flag, it's bullish. So that's the euro. The pound again, solid movement up here on the dailies. Possibly a little less angled than the euro's had a stronger time of it all. The pound sort of playing a bit of later catch up with Brexit worries sort of sitting behind that. One thing that's probably slightly noticeable if you're looking at volumes have been sliding down as this has been moving up, which is a bit of a sort of a divergence in affairs. I was just going to switch across to looking at well, the MACD is not diverging now. I was just looking. There's a marginal divergence across the highs here. But again, at the moment it's looking bullish, but I wouldn't be surprised if this market goes into, you can see the beginnings of a consolidated phase, and I wouldn't be surprised if we see that through much of today. Moving on to the yen, dollar yen. Dollar yen's the safety currency so often. It started catching the move a few days ago, more stronger on Friday actually than any other currency, and we saw a follow through on Monday. Tuesday less. It's slowing down this price action at the moment. Bit of divergence across the lows there, RSI wise. I don't know if that's yeah, maybe the same with the MACD there, but certainly a slow up that we're seeing here. That doesn't mean to say it's going to turn around at this stage, but certainly slowing up. 60-minute point of view, again, you're just seeing this consolidated phase. It's running in there, very bitty, although we've just had this sort of more relatively bigger bar to the downside there, coming back, just testing those lows, but whether it will break those and continue, we'll see. At the moment, though, it does look bearish. So the dollar yen, Aussie dollar gradually continuing this route. It's been a bit slower on the Aussie. It's been mixed at times, more significant retracements, but it's gradually working its way onwards and upwards there, really, but slow. And again, whether this can do too much this morning or today is another matter. I think the story is pretty similar with all these currencies in what they're going to be doing, and we could need, or most likely need, to wait until later in the day to see if anything comes out of this, if anything at all. Canadian dollar. Okay, so it had managed to break that daily 500. It's not really doing too much since then. The little spinning top candle there. It 4-hourly wise does look bearish. Just bring the 60-minute again. On the 60-minute, it's broken. It looks like it's just breaking in a near-term trend. So certainly the Canadian dollar looking bearish there. Okay, US dollar, Canadian dollar, that is. Okay, that's pretty much that. Oil, just having a look at oil. So oil is, well, it's still in that bigger range. I'm just looking at the 60-minute time frame here. Let's just pull out a little bit. You start coming out, you just see it's stuck in that range there, and I think, well, it's around about $1.50 range, maybe $2 range total there. Tops through most of last week and into this week, and it's just got itself a bit rangy at the moment. The oil inventories later on, crude oil inventories, may give it, as I say, may give it a bit of a kicker. We do see some movements coming from that, but for large points, periods of the time here, it is just pretty much going sideways with the occasional sort of, if you can catch a bit of the price action that does occur, great, but otherwise you're going to sit there for a long time with not a lot of movement. Okay, gold, of course, is in a lot of people's focus. It's been seeing lots of reports of now some of the banks suggesting that this is going to go up to $2,300, $3,000 an ounce. We'll see. I always get suspicious when they're doing that. This is almost if they're peddling it. They're peddling something that for years they've held back in price. It's from a daily perspective here, it's maybe running a little bit out of steam, just short of the $2,000 mark, and again, maybe we need to just wait until the Fed reports out the way to see the further route. It did have half a decent correction coming through yesterday, and it has pushed back up there, but consolidating where it is. Will it make the other $42.20 worth to make it hit that 2,000 level? We'll see. But for now, again, even consolidating as I speak. Finally, S&Ps, looking at the just get a flavour of equity markets here, and the S&Ps, well, couldn't hold on to any gains yesterday. It tried its best at one stage, but just literally pitched back, and well, we could see just as I say, another one of these things. It's just likely to consolidate. One thing to look at here is sitting in a downward trend, at this stage. So maybe anything that comes back properly to that trend line may be sold into. Right, that's it for me. As I say, key news today then is the Fed meeting, the statement of the rate, and probably more importantly today, because I don't think we'll see massive changes from that, the press conference. Have a great one. Bye for now.